It's no surprise that Africa's biggest steel producer reported a first-half loss. Weak demand in manufactured goods has hit steel demand hard. The local economy continued to bear the negative effects of the global economic slowdown. Infrastructure-related investments failed to materialize and activity in the mining industry was weak. Steel sales dropped 16% while liquid steel production declined 9%. In the past 12 months, shares in ArcelorMittal South Africa have fallen 25%. The company expects third quarter earnings to be even lower.
The third quarter is likely to be tough. It always is a tough quarter. We've called for earnings at a lower level than quarter two, on principally the same level of demand. But that's short term, and we've been around for 75 years. We intend to be around for another 75 years. So in the longer term, we're very bullish about our prospects. We think that Africa represents the one region where steel is still going to rise as a consumption or as a material to be consumed, and we're very well positioned to capture that growth as it happens.
From an investor's point of view, I can't see investors lining up to buy the shares just yet. But what I would like to say is that, despite the fact that there's no dividend, despite the fact that earnings have taken a big wallop, I think that the outlook in time is positive.
ArcelorMittal says the proposed carbon tax will cost the company more than 600 million rands a year if implemented. Treasury published a tax discussion paper in May.
The imports coming into South Africa are from countries that don't have a carbon tax. So the net effect of all this is that we will produce a bit less, China will produce a bit more, and eventually we will not be able to compete. That is actually something that even Europe couldn't address, is this idea of carbon leakage, where steel production will just move to countries that don't levy a carbon tax. It's a rather obvious thing that would result from this.
ArcelorMittal sells 90% of its steel in Africa, but domestic sales are expected to remain flat, and it warns that any increase in prices will be offset by increasing costs like higher electricity tariffs and iron ore prices. Diabo Seton, SABC News, Johannesburg.